Hello, entrepreneurs. Today, we're diving into the 15 biggest tax write-offs for small businesses. As a business owner, every dollar counts, and understanding these write-offs can put a significant chunk of change back into your pocket. We're talking about completely legal ways to reduce your taxable income, which translates to keeping more of your hard-earned money. So if you're ready to slash your tax bill and boost your bottom line, buckle up, because we're about to unlock some serious savings. Now, I'm not a tax professional, so this video is for informational purposes only. Always consult with a qualified CPA or tax advisor to discuss your specific financial situation and how these deductions apply to your business. With that said, let's dive into the first write-off on our list. First up is the home office deduction, and this one's a game changer for those of you running your business from home. If you use a dedicated space in your home exclusively and regularly for business, you could be eligible to deduct a portion of your rent or mortgage interest, property taxes, utilities, and even homeowner's insurance. To figure out your deduction, you can use the simplified method, which allows you to deduct $5 per square foot of your home office, up to a maximum of 300 square feet. Or you can opt for the standard method, which involves calculating the actual expenses based on the percentage of your home used for business. For example, if your home office occupies 10% of your total home square footage, you can deduct 10% of eligible expenses. Keep in mind that the home office deduction has specific requirements, so make sure you meet them to avoid any issues with the IRS. Next up are internet and phone bills. In today's digital age, staying connected is essential for almost every business. And the good news is, you can typically deduct the portion of these bills that's directly related to your business operations. Think about it. You're likely using your internet to research competitors, manage your website, send emails, and handle online transactions. And your phone? Probably busy with client calls, networking, and coordinating projects. These are all legitimate business expenses. Now, you can't deduct your entire bill if you're also using these services for personal use. The key is to determine the percentage used for business and only deduct that portion. Keep detailed records of your usage, like itemized phone bills and internet usage reports, to support your deduction. Trust me, having solid documentation will make tax time a whole lot smoother. As a small business owner, especially if you're self-employed, you're responsible for your own health insurance. The good news is, the IRS allows you to deduct 100% of your health insurance premiums for yourself, your spouse, and your dependents. This can be a significant deduction, potentially saving you thousands of dollars come tax time. Now, to qualify for this deduction, you need to be enrolled in a plan that covers medical care. This could be through the marketplace, a private insurer, or even a spouse's employer, as long as you're paying the premiums yourself and not receiving a deduction for them elsewhere. Remember, this deduction applies to your health insurance premiums, not your out-of-pocket medical expenses. Those are handled separately on your tax return. And one more thing, keep meticulous records of all your premium payments. This means saving those invoices, bank statements, or any documentation that proves you paid for your health insurance. Having these organized will make your life way easier when you're filing your taxes. Trust me. We all know business often involves meeting clients or potential partners over a meal. The good news is, the IRS allows you to deduct a portion of those meals as a business expense. But here's the catch. The deduction is generally limited to 50% of the cost. Now, to qualify for the deduction, the meal must be considered ordinary and necessary for your business. A fancy dinner to impress a client? Probably deductible. Ordering takeout while catching up on emails? Not so much. It also needs to be with a business contact, so lunch with your employees wouldn't count. But wait, there are some exceptions where you can deduct 100% of the meal cost. For example, meals provided at a company-wide event, like a holiday party or a training seminar, can be fully deductible. Just remember, keep those receipts. You'll need to document the date, time, location, attendees, and the business purpose of the meal. A good practice is to jot down a quick note on the back of the receipt right after the meal so you remember the specifics. If you're traveling for business purposes, you might be surprised at what you can deduct. We're talking about flights, hotels, rental cars, taxis, even those airport snacks, as long as they're directly related to your business. However, there are some important distinctions to keep in mind. The trip must be ordinary and necessary for your business, meaning it's directly related to generating income or conducting business activities. A trip to a conference for your industry? Totally deductible. A business trip that conveniently coincides with a personal vacation? Not so fast. And while you can deduct travel expenses for yourself, you can't deduct travel costs for your spouse or family members unless they're also directly involved in the business aspect of the trip. So, no writing off that family vacation as a business expense just because you answered a few work emails by the pool. As always, keep detailed records. Save those receipts for flights, hotels, meals, and transportation. A good travel app can be your best friend here, helping you track expenses and organize receipts digitally. Let's talk about using your vehicle for business. You can't just write off your new Tesla because you drove to the post office once. Track your mileage for business purposes. Use the standard mileage rate or actual expense method. The standard rate is simple. Multiply IRS rate by business miles. The actual expense method tracks all vehicle-related costs. Deduct a percentage based on business use. Crunch the numbers to see which method benefits you more. Accurate tracking is key. Use an app, notebook, or spreadsheet and keep detailed records. The IRS loves documentation. Keep personal and business driving separate. Don't write off personal trips as business expenses. Listen up. Every business has risks, and it's essential to protect yourself. That's where business insurance comes in. The good news is that many types of business insurance premiums are tax deductible. First off, we've got general liability insurance. This one covers you if your business is sued for things like bodily injury or property damage. Super important, especially if you have a physical storefront or customers visiting your workspace. Then there's professional liability insurance, also known as errors and omissions insurance. This one is crucial for service-based businesses and protects you if a client claims your work caused them financial harm. Don't forget about property insurance. This covers your business property like inventory, equipment, and even your physical workspace from damage or theft. Whether you're renting or own the space, it's essential to have this coverage. And if you have employees, you know workers' compensation insurance is non-negotiable. It covers medical expenses and lost wages if an employee gets injured on the job. Remember, insurance is about protecting your business and your hard-earned money. So, talk to an insurance broker to determine the specific coverage you need for your industry and business structure. Don't skimp on this, all right? It's better to be safe than sorry. All right, let's be real. You can have the best product or service in the world, but if nobody knows about it, you're not going to make any money. That's why advertising and marketing are crucial. Online ads, billboards, print ads, and radio jingles. Content marketing, email marketing, and social media marketing. Expenses must be directly related to promoting your business. Keep your receipts, track your spending, and invest wisely to ensure success. All right, let's talk about legal and professional fees, another area where you can save some serious cash come tax season. Running a business, even a small one, often means hiring professionals like lawyers, accountants, and consultants. You might need a lawyer to help you navigate a contract, an accountant to sort out your taxes, or a consultant to give you an edge in your industry. The good news is, the fees you pay for these services are often deductible. Think about it. These expenses are essential for running your business, right? So the IRS lets you write them off, which can make a significant difference in your tax bill. Now remember, just like with home office deductions, we're talking about expenses directly related to your business. Hiring a divorce lawyer? That's personal, not deductible. But if you're hiring a lawyer to trademark your business name or review a lease agreement for your new office space, you're in business expense territory. Keep all your receipts and invoices organized and make sure you can clearly link these expenses to your business operations. This is crucial when it's time to file your taxes or if you ever get audited. Trust me, having everything documented and organized will save you a major headache down the line. Let's face it, the business world is constantly changing. Staying ahead of the curve often means investing in your education and training, and the best part? You can often deduct these expenses on your taxes. We're talking about courses, workshops, seminars, and even online programs that help you improve your existing skills or gain new ones relevant to your business. Now, it's important to note that the education expense should be closely related to your current business. Taking a cooking class might be fun, but if you're running a software company, it's probably not deductible. However, if you're taking a course on the latest coding language to improve your software, that's a different story. The IRS wants to see that these educational expenses are helping you maintain or improve the skills you need for your business. So, keep all your receipts, course descriptions, and any other relevant documentation. This will come in handy when you're filing your taxes and need to justify the deduction. Remember, investing in your education is not only good for your business, but also for your own personal growth. So take advantage of the tax benefits and never stop learning. Let's talk about business interest, a tax deduction that can save you a significant amount of money, especially if you've taken out loans to fund your business. Whether it's a business loan, a line of credit, or even interest on your business credit card, the IRS allows you to deduct the interest you pay on these debts. Think about it. When you borrow money for your business, you're essentially using those funds to generate income. The interest you pay is a cost of doing business, and the IRS recognizes that. This is why they allow you to deduct it, which can make a big difference in your taxable income. But here's the catch, and it's an important one. The loan or credit card must be used primarily for business purposes. If you're using your business credit card to buy groceries or pay for personal vacations, that interest won't be deductible. Keep meticulous records of your business expenses and separate them from your personal expenses. This will make it easier to track your business interest payments and ensure you're deducting the correct amounts on your tax return. Now let's talk about depreciation. It's one of the most powerful tax benefits available to business owners. Depreciation lets you deduct the cost of your business assets over time. For example, you buy a $30,000 car for your business. You won't deduct the entire cost in the first year. The IRS allows you to spread out the deduction over the asset's useful life. If the car's useful life is 5 years, you deduct a portion each year. This results in significant tax savings, especially for long-lived assets. Track your depreciable assets meticulously. Keep good records to maximize your deductions. Consult a tax professional to ensure you're taking full advantage. Let's move on to something crucial for every business owner: retirement contributions. As entrepreneurs, we pour our heart and soul into our businesses, but it's important to prioritize our financial future. That's where retirement plans come in. Contributing to a retirement account sets you up for a comfortable retirement and offers tax advantages. There are various plans available, like Solo 401(k), SEP IRA, and Simple IRA. The best option depends on your business structure and income level. Contributions are often tax deductible, lowering your taxable income. Plus, the money grows tax deferred until you withdraw it in retirement. Start planning for your golden years today. You'll thank me later. All right, let's talk about those everyday essentials that keep your business running: office supplies and equipment. We're talking about things like pens, paper, printer ink, staples, the stuff you constantly find yourself running to the store for. The good news is, these are generally deductible expenses. Now, when it comes to deducting these expenses, you've got two main options. You can either deduct the actual cost of the supplies in the year you bought them, or you can deduct a portion of their value over their useful life. That's called depreciation. For smaller items that you replace frequently, like pens and paper, deducting the cost up front usually makes the most sense. But if you've got bigger ticket items, like a new printer or a fancy ergonomic chair, you might want to look into depreciating those assets. It can help you spread out the deduction over several years, which might be beneficial for your tax situation. Just remember to keep good records of all your purchases, no matter which method you choose. And one last tip, don't forget about software subscriptions. If you're using any software specifically for your business, like project management tools or accounting software, those subscription fees are generally deductible as well. Keep those receipts handy. Let's talk about something good for business and the sole charitable contributions. The IRS often rewards your generosity with tax benefits. Donations must be made to a qualified 501(c)(3) nonprofit. There are limits on deductions, based on your adjusted gross income. Keep accurate records of all donations for tax filing. Non-cash donations can also offer significant deductions. So there you have it, 15 tax deductions that every small business owner should know. Remember, understanding these deductions can potentially save you a significant amount of money come tax season. But tax laws can be complex and are subject to change, so it's always a good idea to consult with a qualified tax professional to discuss your specific situation. Don't forget to subscribe, share, and like this video if you found it helpful. Hit that notification bell so you don't miss out on any future videos about building your business and achieving financial freedom. Thanks for watching, and here's to your success.